stock declined 13.5%, its biggest single-day decline since March of 2002. The reason is disappointing numbers. Now, what the Indian investors are watching closely is Oracle's cloud revenue. Now, Oracle's cloud revenues grew by 30% in the quarter gone by, but this is slower than the previous 54% growth that they had in the quarter before that. Now, cloud has been the fastest growing segment for the Indian IT companies. Indian IT companies, with the help of these hyperscalers like Alphabet, Amazon, AWS, Oracle, etc., help enterprises, their clients, migrate to cloud and build products and applications and platforms on that cloud. So cloud is a very essential piece. If cloud is indeed slowing down, as Oracle numbers seem to suggest, then it could be a negative read-through for the Indian IT companies. Back to you.
Thanks a lot, Reema, for that. Well, we're just heading into the market opening, so let's brace ourselves for that. We have, as I was saying, there was a big fall that we saw in the mid-caps yesterday, so perhaps you want to be a little cautious in that arena. The Nifty for now is flat, but look at the mid-caps, down about 60-odd points. So straight off the bat, we've started with a small cut on the mid-cap index. The Bank Nifty as well is down about 50 points. Not looking too great there. The Nifty is holding up, so around that 19,970 mark, which is not a bad thing actually, just consolidating around those levels. But there are some steep losses that you're seeing in the mid-cap end, so I just want to point that out. Lemon Tree Hotels, and remember, these are stocks which have been big gainers this year, right? Lemon Tree Hotels is down about 2.5%, IRFC, Ircon, RVNL, HCC, Bank of Maharashtra, Vodafone Idea, NHPC, all of them are down anywhere between half to about 4-odd%. ITI is down almost about 4-odd% as well. The mid-cap index is now down 140 points, so it's getting worse as we speak. The percentage fall may not look like it's too much, but there are plenty of stocks that are down about 4 to 5-odd%. In fact, this entire PSU basket continues to correct, so just keep an eye out on that. MMTC, Ircon are your top losers. Then, of course, RVNL, ITI, Bata, as Nimesh was pointing out, there's a cautious call there. Chola Finance, Max Health, Jupiter Wagons is down about 4%, so that pocket not looking good. For the frontliners as well, the mood is a bit on the somber side. So now the Nifty is down almost about 30-odd points, led lower by IT stocks. I think it's just routine profit-taking is what you're seeing in the market.
Indeed, so it appears to be that. Now, in terms of top stocks that are moving around, Granules, that's the big winner actually from the broader markets. That's up close to 3%. Indiabulls Housing Finance is up close to 2.5%, and RBL Bank as well up more than 2%. So those are the part of the winners list. The other couple of stocks that are under pressure, you have Oracle Financial, as Reema told us. Commentary from the parent was not very encouraging, so that stock was down close to 13% overnight. We have Oracle Financial out here that's down close to 3.5%. Bata India as well is pulling back close to around 2.5%. And Genuspa, the smart meter play, well, that's down close to around 4% to kickstart trade. But earlier today, we had Jmar Pa, who said that they won a large order, on the smart meter front itself. So they are up close to around 5% approximately. So good move is what we've seen out there. Lemon Tree, I think that's done a quick U-turn. It was down close to around 3%. Now it's up close to around 3%. So a big U-turn is what we're seeing out there. And NIIT, we had the management here on CNBC-TV18 yesterday. The stock, by the way, in the last 3 sessions is up more than 50%. It's up close to around 10% as we speak even today. Prashant.
It's a normal kind of a day after a very unusual day that we had yesterday. And that is good to see. I mean, that's the first starting point it's not a crazy kind of a open. The small cap index, let's actually put that index up. That is up 0.4% now. Actually almost a 0.5% gain in the small cap index. And you've got the mid cap index, which is slightly lower, but nothing. 0.1, 0.15% or so. Market breadth, now advances are putting some distance between them and declines. So 1,200 stocks are higher. And actually, it's almost 2:1 in advances to declines. This is very, very early days, but this is what's coming up. KEC is up 7% with there's an order win, and it's coming up as the largest volume traded name as well in the broader market. There is SJVN, which is up 4%. Cochin Shipyard, some of these were down 10% yesterday. Cochin Shipyard is coming up with a 6% gain. So it's recovering 11.27, 11.28 in Cochin Shipyard. Indiabulls Housing Finance was down 10% yesterday. It is coming back up about 3%. IOL Chemicals is another one which is up 8%. RITES is coming up. So the first of these railway names which are all without exception, down 10-11% yesterday. REITs is coming up with a 4.5% gain, 536. BEML coming up with about a 3% pop. And, RBL Bank, which is up about 3% or so as well. So that's what's coming through. I think, you had the Nifty, the small cap index, which had closed just under its 20-day moving average. But with this 0.8% gain on the small cap index, we've come back to that average, the 20-day. The mid-cap never got there. The mid-cap index never got there. That's trading absolutely flat right now. So this is, the open. So I would say, actually the open is very, very good given the circumstances from yesterday's session. So the Nifty is down about 13 points. Like yesterday, that is a non-actor. Nothing really happened on the Nifty and the Bank Nifty yesterday. It was all in the broader market, broader universe. So that bears watching. More than anything else. Mihir Vora is now joining us. He's Director and Chief Investment Officer at Max Life Insurance. Mihir, good to have you with us here. Thank you very much.
Always a pleasure.
What did you make of yesterday and so much, I don't want to say water under the bridge, but a fair bit of speculation about what could have happened and what are the circumstances, etc., etc. What's your sense?
The speed at which the small caps had gone up over the last couple of months, something like this was waiting to happen, I would say, but I don't think it's anything unnatural or unexpected, because stocks are up 50, 60, 80% in a month, so 4 or 5 or 10% correction is to be expected. And if you notice the numbers, frankly, it's not the institutions, neither the domestic institutions nor the foreign institutions who've been driving this segment in the last couple of months. It's mostly been the domestic retail and HNIs. And when a certain stock goes down by say 5 or 10%, there is a follow-up liquidation of positions, etc. It happens. I don't think it's very unusual. And yesterday's move is nothing to be worried about, I would say. It's just one of those things where there was a bit of a froth in certain stocks and spaces. Not unjustified probably, but maybe stocks running ahead of time. But just natural correction.
I think that's also very healthy for the market, right? To get these periodic natural corrections, get the froth out of the system. But do you think that this could have a longer runway, the correction I mean? You can't even call it a correction yet. It's been a one-day fall.
Correct.
But you think that it's time to get a bit cautious in the mid and small cap space now?
In general, yes. I have been mentioning the fact that there is some froth being built up in specific segments of the mid-cap and small-cap space. More, I would say, in the small-cap space. And not most of it is news-based and fundamentals-based. So I would not say that there is no basis to the euphoria or the bullishness, but it's just that certain stocks are discounting too much far out into the future. So it's just a question of valuations rather than fundamental questions. I don't think we are still in a situation where really shady companies have been, doing the best or anything like that. Of course, there is a bunch of that. But so far, if you look at the top 100, 200, 300 stocks, they have been moving based on fundamentals. Is the valuations that are another question, and these kind of corrections probably bring some sanity back into the valuations.
Okay, all right. Hi, Mir. Good to have you in the studio. Mir, what do you make of this PSU theme that has played out? Because that's caught everyone by surprise. Everyone is saying these guys are not going to perform big time, in terms of a stock price. And now I don't know what they're factoring in terms of the forward earnings, the street that is. Some of them profitable. Float is very, very limited. How are you all approaching the PSU theme? Have you all participated any of these themes? Either it's the banking names, the defense, or the railways?
See, I'm not looking at it as a PSU theme.
Okay.
So if you notice, it's been stock specific and sector specific. For example, the OMCs have not moved.
Yeah.
Right? Because of their fundamentals. What has moved is stocks in the PSU banking space, improving asset quality. Defense, we all know the theme. Railway linked companies, because government spending has gone up. So I think it's been a sector and stock specific move rather than clubbing everything together into the PSU space move. Utilities have done well because there's a power shortage, right?
Correct.
So you have the coal producing companies, you have the utilities which are probably investing a lot into the renewable space. So there is company specific positives which are driving the stocks. I'm not clubbing everything as a PSU theme.
Okay, but which one of them has a better runway according to you? If you have to look at it. Because some of these stocks, they've run up quite a bit. And my fear is a couple of them, which, I just don't want to name them because unnecessarily problems out there. But, some of them have already run their distance, it seems. And the float is very limited.
Absolutely. So for institutions like us, it doesn't make sense to participate in those really, low float companies. So we haven't, because even if we wanted to, we couldn't, right? But the larger ones are still liquid, and especially in the larger, some of the names like utilities, energy companies, the valuations are still quite okay.
Okay.
What about some of these spaces that have come back after a while? Technology, for example, large cap IT, even mid cap IT has come back. You know, many of these stocks are up 20%. Many of them are sitting at 52-week highs. Your thoughts?
That's because the US economy has done much better than expected. 3 or 4 months ago, the situation was probably a hard landing kind of a scenario was being painted. Now it looks like a softer kind of a landing scenario. So the fears about the US economy have not been as bad as expected, and that's the reason why you see the IT sector coming back.
But would you put money to work here?
I would, because IT sector after 22 has still underperformed. So while they're up from the bottom, valuations relative to the rest of the markets are still attractive. And if we are saying that a lot of the mid-cap and small-cap space looks expensive, then this is a good space.
So large
apart
cap
from
is what you're looking at.
Large cap and financials. Financials are still not run up that much.
Let's just have the mid-cap as the small-cap index up on the screen. It's now up 1.2%, the index. So, that's the first rate, 12,600 on the Nifty small-cap index. And let's have if you can pull up the Nifty micro-cap index, right? That's the the smallest of the lot in terms of market cap. That is up almost up 1.5%. So this is where bulk of the damage was, the small cap and micro cap index. And in that space, there is buying which is coming back very, very clearly. You got what 3.5:1, 4:1 kind of advanced to decline ratio. So I want to say again, this is early days, but it's a regular kind of. We're used to 0.5%, 0.6% higher opening on the mid and small cap index. So it's a normal kind of open in that sense, and not a manic day like yesterday. I think by this time yesterday, maybe a little later, 10-15 minutes into the session yesterday, things had started to come off very sharply in that area. So this is not bad. Mir, you put out a post on Twitter, and I found it very interesting. You're saying that AUM in mid and small caps, and I'm just paraphrasing you, and I want you to explain that, is larger than AUM in large
cap funds. Yes.
Large cap funds?
Yes. The total AUM of...
is that true?
It is true. And,
what are the numbers? Give us if you remember the numbers.
So if I remember the numbers, mid plus small cap funds are about 4.2 lakh crores now.
Okay.
And large cap funds are probably about 60% of 70% of that. Pure large cap funds.
Okay. So pure large cap.
So if you look at the equity AUM of the MF industry,
okay,
the large cap fund AUM is about 14%. The flexi cap category AUM is about 15%.
Okay.
The mid plus small cap segment is around 12 plus 13%. So approximately 23%, which is larger than flexi cap, larger than large cap.
And mid
plus small is 23.
Yeah, but that will be even larger because mid cap funds would also put money in. Would they have exposure in large caps as well, or no? I mean, very little.
It can't be more than
35.
It can't be more than 35% in any case because of the.
But it'll level out, right? Yeah. Because large cap funds.
But then you also need to count the mid and small cap exposure of the flexi cap funds, which is the largest category today.
So 23% mid and small, as compared to
14% pure large cap.
Pure large caps. Wow. And has this happened before, or is this?
I think it's the first time. And another statistic which was there in my previous tweet, if you had read that, is that the number of folios, mutual fund folios, in just small cap funds has for the first time exceeded the number of folios of large cap funds.
Wow.
Wow, that's interesting. Okay, so now we know where that froth is coming in from, right? But thank you so much for joining us, Mir. Appreciate your time here
Always a pleasure.
on CNBC-TV18. Thanks for joining us in the studio. Thanks. Let's slip into a quick break. When we come back, there is a new IPO opening up, which has gathered a lot of interest because the business is very strong. RR Kabel, the IPO opens today. Sri Gopal Kabra, the promoter and managing director, and Rajesh Jain, the chief financial officer at the company, will be with us. Later, we'll also be joined by Sanjeev Singhal, who is the chairman and managing director at Mazagon Dock Shipbuilders, to discuss the company's business outlook. Welcome back to Bazaar Morning Call. Well, RR Kabel is on our radar. Their 1964 crore IPO opens today. So the IPO size is just a little under 2,000 crores. Out of this, 180 crores is a fresh issue, while about 1780 crores is via an offer for sale. Do note that the company has a very strong business. They've seen over 30% compounded growth in their revenues over the last 3 years. They have 7% market share in the cables and wires industry overall. And about 40% of their domestic business comes from two regions, which is Gujarat and Maharashtra. We have Sri Gopal Kabra, who's the promoter and managing director at RR Kabel, and Rajesh Jain, who's the chief financial officer at RR Kabel, joining us now. Gentlemen, thank you to both of you for joining us here. Mr. Rajesh, I want to start with you because, you know, just before we started the interview, you were telling us about how you have a large presence, domestic business in the West region, both Maharashtra as well as in Gujarat, and you have overall 7% market share as well. What is the kind of growth that you are looking at, say, over the next 2 to 3 years, both in terms of market share as well as in terms of a top line?
So when we see we are in wire and cable industry, which is fastest growing industry. Like if you see India is growing in residential sector, infrastructure, we are doing very well. Economy is like moving from fossil fuel to green energy, from traditional vehicle to e-vehicle. So this industry is expected to grow at very high range. And if we see, like historically, we have grown more than 30% CAGR in last 3 years. So this is very promising sector, and we are doing good.
So 30% is something that you can replicate in the next 3-4 years as well, you think?
So like this will not be right to give any future statement, but yeah, we are doing very good if you see.
Mr. Kabra, talk to us a little bit about the business itself. I mean, you know, you're a promoter, you've seen this business grow over the decades. What is, and you are, you know, in the top 5 players in this segment, the cable and wires business. What kind of growth do you see, and what is the potential here as you see it? You also have a FMEG business. I mean, you have fans and you have lighting, etc. And there I was looking at numbers comparing to other players in the segment. I mean, you know, the polycabs and the others, etc. The FMEG business is relatively, as a percentage of your own business, slightly larger. So give us an outlook there as well.
See, basically, if you look into the growth perspective, I see a very bright future for this sector altogether. So total things are shifting. The future, whatever new thing is happening is electrical. Whether you go for EV charging, like see, a lot of investment coming to data center. Then logistics. See, after GST and demonetization, the logistics is a big investment. If you see the last year record that India sold more commercial space than US. So everything we are breaking the records. So demand is plus. The main thing is the aspiration level of Indian today is different. See, like when suppose you will take my age, so we used to buy flat at the age of 50, 55. Today, average buying of flats is at the age of 37. So this will go up to 34%. If you look at the way urbanization is happening, people are shifting from villages to city. Yeah. So their growth is there. Plus, if you look at today's paper, the highest demand is today for 2 BHK. It used to be 1 BHK, it was difficult for people to buy. Okay. But after COVID, the things are changed totally, and I see a very bright future for entire sector. Yes. In terms of our company, see what we achieved in
what percentage of the revenues are from the real estate segment?
So real estate wise, maybe 15-20%. Okay. But see, I tell you, in real estate also, the 40% only goes to real estate, 60% goes for renovation. These are data we have. Right. So I was in Holland last 2-3 months before. So in Europe, it's almost 33% goes for real estate and 67% goes for renovation. So it's that we feel that real estate is doing well, the sector will do well. So it's other way also. Even if real estate little goes slow, even then the demand will be there in the market. Yeah.
Okay. All right. Welcome, Mr. Kabra and Mr. Jain. And you know, good timing is what you have picked because the sector is in focus and the stock market as well is vibrant. But let's get a couple of numbers out of you. What is your peak revenue potential? Last year you did around 5,500 crores. Now you're going to be raising some money as well. So how does your balance sheet look like post raising this money and the peak revenue potential? 2 numbers.
Yeah. So if we see, like we are raising 180 crores in the company, and out of that 136 crores will be used to repay our debts, and balance will be for general corporate purpose. Okay. From growth point of view, if we see historically, we have grown at more than 30% CAGR, and this industry is promising. So we are expected to do well in the future.
No, so I just wanted to understand this. You did 5,500 crores. Yeah. Industry growth will be there. You will also have growth, which you would not want to comment on since you are in a bit of a silent period. But what is the peak potential from, I mean, with the current investment, current gross block? Can you do 7,000 crores? Can you do 8,000 crores, 9,000 crores? What is the number?
Yes, so we have capex plan for the coming 2 years where we have investment of almost 500 crores, majorly to expand our cable capacity and wire capacity.
Yes.
And even with the current capacity, we can grow by another 30% with the capacity utilization, doing better, and with the existing expansion what we.
So you can do around 7,000 crores approximately with the current capacity that you have, and on that 500 crores, what is the asset turn?
So it is like almost 5 times on new investment.
So another 2,500 crores. So peak revenue potentials around 9,500 to 10,000 crores, keeping in mind the current capacity
and
plus the
future
expansion.
Sure.
Okay. Yeah. So on that 9,000 crores, 10,000 crores, if you're saying you're putting fresh capex on board, do you have any kind of market share guidance? Currently, I think 7% is your overall market share. Can you get to double digits, say, by the end of FY24, FY25? Any targets that you're looking at?
So this industry is growing at 13 to 14% CAGR, industry as well. And if anyone grows above that average, then of course market share can be. Interestingly, like we started from 0 to 23 years back, and already we have reached to 5% overall market share. So we are doing very well.
But do you think this double-digit market share is something that you can attain, say, by the end of FY24? I mean, do you have any internal guidance?
It is not possible to comment on the market share or about our growth future.
And what about in the export market? What you were telling us that about 20% of your business, 25% of your business comes from there. What kind of growth have you seen up until now, and what's the expectation?
See, growth will be similar what we do in domestic and exports. It can be 1 or 2% more, sometimes in exports, sometimes in domestic. It depends on the market. But best part is RR Kabel is that we have done exports in our own brand. So we are 92% exports. RR Kabel is there also is B2C. So we created brand not only just in India, but we created a brand globally. So today our brand is very respectable, and our exports is all to development where the rules and regulations are very strict. So we are the only company which got 35 international approval for single factory. So that's also, and we are 100% REACH compliance, ROH compliance. So we are very much focused in terms of quality, because we believe this wire and cable is product for the safety.
Right.
So safety.
Just wanted to ask you one more point on this market share before we move on. We track the listed companies, that's Polycab and KEI, and we know they have very ambitious plans, and they're very aggressive as well, in terms of grabbing market share. Do you think your market share will be at risk, or do you think you'll have similar aggression? You'll have done very well, as you said, 20 years, you'll have moved to that 5-7% market share. Is it at risk?
No. It's since sector is growing, we are doing very well. So
you'll be able to hold on to the market share.
Sure.
Mr. Jain, what about margins? Could you provide us with some trajectory? I think EBITDA margins are at about just under 6%.
Yeah.
What's over the next 2-3 years? How is this? Where should we see margins at?
So again, if we see, like we have done very well, and we have done done a high expenditure on expanding our base of electrician retailer. See, we have more than almost 298,000 registered electricians, which is the largest network. We have more than 102,000. More than 1 lakh retailers. So in that way, we have spent very highly in last 2 years, and we have made very good base for our future. If you see, we have 11 winning states where our market share is more than 9%. So in that way, we are expanding, and we are.
Will the margin profile improve? Do you think?
So again, in margin, in FMEG last year we did one acquisition, so there was a bit pressure in my margins. But yeah,
So FMEG, I just want to understand, it's still a small portion, but when will that segment break even, you think?
See, generally FMEG for a company like us, the moment we cross 1,100 crore, 1,200 crores, it will be in positive.
Okay, and by when do you think that would happen? Any kind of timeline that you're looking at?
So there we are planning, I think so, maybe next year.
By next year.
Fans, there are intense competition, right? I mean, I think the one segment which is seeing immense amount of competition is fans. That's what we heard from others.
Yeah. See, fan, we have immense competition, but we also need to understand there is tremendous future in fan. There are a lot of opportunities there, because of the way the BLDC fan. See,
everybody is selling.
It's not because of a mature market now. See, we need to understand how many people knows that whatever power consumption we do in India, 7% goes into fan. And if we save, say, 2/3 power, so India will save 3 to 4% power as a whole. So it's going to be an achievement. And it's a payback period of BLDC fan is almost in 1 year. So now, initially the wealthy people will go, then gradually go. So if you look into this fan replacement market comes, like see, LED, it's happened into LED. From CFL to LED, it was very fast change, like from landline to mobile. So I believe that from this regular fan to BLDC fan, journey will be different if everything goes well. So still technology need to be still evolve, it has to be more competitive, the price consciousness is there. things will change.
Mr. Jain, just to go back to that margin, I didn't get it. So you said that because of an acquisition, margins dipped. What is the steady state margin? Because I'm looking in previous years, you were at 8.5%.
Yeah.
Is that what you will go back to?
So if you see like advertising and sales promotion, my spend is almost double of the industry average. FMEG is the like new growing business, so it is one time of course. So overall we are doing good in terms of first we have very stable growth. Growth is there, quality is there, and the sector is also promising. So in that
I'm not
way,
asking you for a number for FY24 or 25, but do you think you will, in terms of a margin band, you will be 8%?
Stable, yeah.
You should go up to back above 8%. Is that a steady state kind of margin?
we can expect so. Yeah.
Just one more question on the exports, since it's 25% of your mix. Is there a margin difference between exports and domestic? If yes, what is the difference?
So what happens in export, we are exporting to developed country and we are doing in our brand. So initial our journey is very tough to stable and compete against international players. But once we have established our brand, once we have done so, but as of now, there are margin difference in export in compared to domestic, almost a difference of 3 to 4%.
3 to 4%, okay.
Yeah.
Just one last question from my end. Post this IPO, you will be debt-free, is it?
Not debt-free, but debt will be reduced. Like as of now, we have 500 crores of debts, which will be reduced by another 136.
130,
But
okay.
most of my debts are working capital facility, which keep changing based on the growth of the business.
Okay, so the debt will go down by 136 crores.
Yeah.
Okay, Mr. Jain, Mr. Kabra, thank you very much, both of you, for coming to the studios. Good luck with the IPO, and
Thank you.
we hope to speak with you again once the listing is done, and maybe you can give us specific numbers and targets, etc. Thank you very much.
All the best.
Thank you. Okay, I think, I just want to take a quick look at what's happening on the broader markets. I mean, there's a turn. There's a tremendous turn which has happened. You've got the Nifty, which is the small cap index, which is down 1%, 0.8%. That's a massive turnaround from the time that we started this morning. And look at that. Very, very sharp. Not, started like this yesterday, I don't want to say, but it is a very sharp turn. Microcap index, which was up 1.5%, it is down 1% on the day, which means from the day's high, the microcap index is down 2.5%. The small cap index is down 1% on the day, which means the midcap index is down 1% on the day, which means it's down 2% from the day's high. So these are sharp turns which we are seeing across the board. Market breadth is also turned. Wow. The advanced decline will come up on your screen. It was 2:1. It was almost 4:1 in favor of advances, and the crisscross has happened. We are 2:1 in favor of declines. So 1,400 stocks are lower, and you got about 650 stocks which are higher right now. So just a brief, quick look at the stocks which are turning around sharp. It's again the railway stocks. IRFC, Ircon, both are down 3.5%. Suzlon is down 5%. BSE is down 5.5%. We can have these names up quickly. Railtel is down 5%. Max Health is down 6%. Titagarh is coming up with a 7% cut. Texmaco Rail is coming up with about a 2.5% cut. NCC is down 2 3/4. Raymond is down 4%. Tube Investments was down 10% yesterday. It is down another 5%. Data Patterns is down 4%. So a lot of stuff coming into the mix now, and a complete sort of different look on the indices from the time that we started. These indices are down 2.5% depending on what you look at. This is the broader market we're talking about. The Nifty, which it was flat, it's down 20 points. So once again, like yesterday, not very much to comment specifically on what's happening on the benchmark Nifty. Nigel.
All right. Let's move on then, and let's focus on one such stock. That's Mazagon Dock Shipbuilders. Well, that's in focus. Remember, that's been one of the big outperformers. It's up 200% in just 6 months. The company's order book now is at around 39,000 crore rupees. To discuss this and more, well, we're joined by Mr. Sanjeev Singhal, the chairman and managing director at the company. Hi, Mr. Singhal. Good morning. Thanks so much for joining in. I wanted to focus on a couple of aspects because your order book is close to around 39,000 crores odd, but the street wants to know visibility on that order book. So let's start off with the additional 3 more Scorpion submarines orders that we're waiting by for. What is the update out there? And what could be the total quantum of this particular order? You've already executed, I think, 5 to 6 submarines, and 3 more are in the offing. Go ahead, sir.
Yeah, with respect to the additional submarines, which is 3 in numbers, right now we are working with the Naval Group France for preparation of the build strategy, and we target to submit the build strategy by October this year. Subsequent to the submission of the build strategy and the budgetary quotation, the process will be taking place with respect to bureaucratic approvals, which will be at different stages. Difficult to predict the timelines right now, but we expect things to happen pretty fast.
So, do you think we'll hear about it in this fiscal?
Yeah, we are expecting this fiscal.
Closure. And what could be the rough number out there? It will be around 7,000 crores per submarine?
We will not be able to predict any kind of a number right now because this would be something which we have to submit to the Navy, and then this would be subject to negotiations also. So we would not like to predict any numbers. What we can say is, yes, the last order for 6 submarines, which was a firm price of around 2011-2012, this was 20,000 crores for 6 number of submarines. So this is almost more than 10 years have elapsed in between. So there would be certain escalations, and we are working on the design changes and the specification changes which would be taking place for these additional submarines. So they will also have a cost implication.
Okay.
So the real
Mr.
numbers
Singhal,
we'll be able to discuss.
got it, got it. You don't want to share the numbers, but overall for the business, right? Earlier, I think you had given a guidance that there'll be a 10 to 12% growth in FY24. Do you stick by to that guidance? And on this base of around 8,000 crores of revenues, where do you think you will end the year?
Yeah, we continue to maintain our guidance with respect to around 12 to 15% increase in the top line for the year 23-24.
12 to 15%. So that's higher than what you had stated earlier, is it? Because earlier you spoke about 10 to 12%.
Yeah, as we proceed during the year, a greater clarity does emerge. I have been maintaining that we should not be compared on a quarter-to-quarter basis because this is a different kind of industry with lumpy executions and lumpy order books and long gestation periods. A quarter-to-quarter comparison would not be okay, but on a year-to-year basis, yes, certain comparisons can be done. And as we proceed more towards the year, a better clarity does emerge.
Okay. Mr. Singhal, just a couple of questions. Good morning, Prashant here. Could you tell us what is the order book now?
Yeah, we have an order book of around 39,000 crores as of 30th of June 23, which comprises primarily of 4 orders, which is the 15 Bravo missile destroyers, 4 in number. We have already delivered 2. One we are targeting for delivery this year, and the last one would be delivered sometime in 24-25. We have another order of 17 Alpha, which is 4 number of frigates, which we are targeting the delivery to start from next year onwards, and subsequently 1 stealth frigate each year. We also have a P-75 Scorpion submarines, which is 6 in numbers. We have already delivered 5. The 6th submarine we are targeting for delivery by end of this fiscal, or maybe early next year. In addition, we have received one smaller order of around 2,700 crores, which is with respect to medium refit and life certification of one of the earlier commissioned submarines, which has already had a life of 30 years, so which has come for life extension to us.
Right.
So these are the 4 orders primarily which we are expecting.
Yeah. What about these? You have 6 submarine orders, which there was some talk around that.
Yeah, that is a new project, which is Project P-75I with the air independent propulsion system, for which we have submitted the price bid, technical and price bid on 1st of August in collaboration with TKMS Germany.
So that is the 40,000 crore total order, for which you submitted bids.
AON value published in 2018 was 43,000 crores. So there could be certain changes. We have already submitted the bid, and this would be now technically evaluated, and certain field evaluation trials would be there.
By when will we hear something firm on this? When will this be awarded, in your opinion?
I believe that this would take around 18 months.
And typically this would go into, how many players are in the fray?
There are 2 bidders, Mazagon Dock shipbuilders in collaboration with TKMS Germany, and L&T in collaboration with Navantia Spain. So basically 2 bids are there. So both the bids will be evaluated and field evaluation trials would be there. Then depending upon who is L1 and what negotiations take place, the order would be finalized on one of these.
Okay. All right. Hi, Mr. Singhal. I wanted to ask you another aspect. So clearly you're sitting on a good order book, 39,000 crores. So that's close to around 4 times your trailing revenues. So it appears that execution is going to be key from here on. I wanted to ask you, what is your current utilization levels that you're functioning at? Mid-50s?
For a shipyard kind of an industry, the utilization levels are very dicey. These cannot be decided because
you can give us a rough number, sir. A rough number.
A rough number in terms of capacity, I can say that we have a capacity of building 11 submarines simultaneously and 10 warships simultaneously. So we can construct 21 vessels at one go. They have to be at different stages of production. So corresponding to this, right now in hand, we are having 6 ships and we are having 3 submarines, 1 new build and 2 number of medium refits and life certifications. So one MRLC we are targeting for delivery December this year. So we will be having 2 submarines post-December.
Got it. Okay. So appears, if I just go by what you are telling us, you should be in approximately, 50-55% utilization levels, just going by the numbers that you're giving us in terms of quantity. When do you see this number head up? Because currently you're doing around 8,000 crores. The visibility in terms of execution, do you think by 2025, 2026, you can say may do 16,000 crores of revenues? Good order book, order inflows as well expected?
It will always depend upon the materialization of the orders. Yes, we do sense that there is a huge requirement of the Indian Navy. Next generation destroyers is being discussed, which would be 18 numbers, approximately 80,000 crores to be spread over 2 players. Similarly, there is a discussion with respect to 17 Bravo stealth frigates, another 18 numbers that also to be distributed amongst 2 players. So Mazagon Dock Shipbuilders continues to be a very strong contender. Well, as far as destroyers are concerned, nobody else in India has constructed destroyers till date. Mazagon Dock Shipbuilders has a proven record of delivering destroyers successfully. In fact, between 2014 to 2022, if we consider, we have delivered 8 number of destroyers, which is approximately 1 destroyer every 20
Mr. Singhal,
months.
sorry, got it. Just one. Sorry, we are a little out of time, so humor me. Just to take my colleague's point forward. Even if you were to win, say for example, the submarine order, right? There are 2 contenders, and if it were to come your way. Will there be significant accretion to your earnings? Because the current order book will get exhausted by FY27. So even if you were to win this this new order, will there be any significant change in earnings or earnings expectations?
Typically, the shipbuilding industry follows a S curve, where during the initial period from the award of the order, the value of production growth is on the lower side. And once the equipment buildup starts, then there is a significant growth in the value of production as well as revenue. So in the initial years, it is not likely to be exceptionally high. But yes, our current order book would be continuing for next 4 to 5 years. And any new orders, this would be adding to the yearly revenues.
So, Mr. Singhal, these upcoming RFPs for these next generation patrol boats, interceptor boats, corvettes, etc., can you tell us what is the potential quantum of these orders?
Total quantum, including the next generation destroyers, including the 17 Bravo, including the submarines, we see a potential market of approximately 250,000 crores with next generation corvettes, patrol vessels, and some smaller vessels. So the total requirement would be something around 250,000 crores, on which various shipyards would be competing. We see that for the big ticket orders, which is destroyers, which is frigates, and which is submarine, Mazagon Dock Shipbuilders continues to be a very, very strong contender.
Okay, so just some follow-ups here. 250,000 crores is the potential you said for these next generation vessels. In terms of a timeline, what are we looking at for the RFPs? And over and above this 40,000 crore order book that you have, what kind of visibility do you see from this pocket over the next, say, 1 to 2 years?
Like right now, what I said, the visibility is with respect to 3 number of additional submarines and P75I, 6 number of submarines where the price bids have been submitted. With respect to other orders, the clarity would be emerging with time, but yes, they are at different stages of approvals. So we expect maybe in next 6 to 12 months, a better visibility would be there with respect to the materializing of these orders.
Well, one final question before we let you go. The stock has been a big outperformer, and going by what you're saying, in the coming years, there's going to be a good revenue growth out here, and your margins, I think, are pretty much fixed. Have you heard anything about divestment on the company? Because the government of India still holds close to around 85% odd. Opportune time for them to sell. I mean, that's what market knowledge would say. But have you heard something?
Yeah, as per the SEBI mandate, we are required to 25% offloading is required. Right now, we are at 15%. We have time up to August 24. So it depends. And in case any exemptions are required, if the government is not interested in further divestment, then maybe some exemptions may be applied. But right now, we have time up to August 24.
But have you heard about something, say, in the next couple of months or this fiscal?
These discussions do continue. There are off and on, but the priorities keep on changing. So I would not be able to predict as to when MDL is listed as a priority for further disinvestment.
Okay, we'll leave it at that. Thanks a lot for joining us, and all the best with your business. That's Mazagon Dock. They've actually raised the revenue guidance for the full year. Earlier they had said they'll do about 10 to 12%. Now they're saying they expect a 12 to 15% growth in their revenues for FY24, and the stock actually is holding up in a falling market. So that's one space that the street has definitely liked.
Sonia, take a look at the broader markets as well. I mean, if you can have the small cap index up. There is a recovery. So there's a fair bit going on while we focus on, companies. Look at the index, sharp move higher right at the word go, a sharp cut after that, and now things seem to be settling down slightly lower. I mean, on the small cap index and on the mid cap index as well, we're down 0.5%, which means that we are off the lows by about 1.75% or so there as well. Broader market breadth is also slightly negative, nothing large. It had gone to about 2:1 with on declines to advances, but you got 1,100 stocks lower and about 900 stocks which are so almost actually pretty much a 1:1 or so is where we are. Sonia.
Okay, so the other space that we're looking at is the logistics space, right? Gati is on our radar. For the month of August, the company's volume surged 24% year on year, and they're witnessing a very strong start to the pre-festive ordering. Pirojsha Sarkari, who's the Managing Director and Chief Executive Officer at Gati Express and Supply Chains, is joining us now. Pirojsha, thanks for being with us. I want to understand how the demand situation is panning out, because we're heading into, what could be one of the biggest festive seasons that we've seen in a very long time. But at the same time, consumption trends are indicating that there is a bit of a slowdown as well. What are you seeing in terms of demand trends? And this 24% volume growth that you've seen so far on a year-on-year basis, is this something that you can replicate in the quarters to come?
So first of all, thank you for having me on the show. Always a pleasure. Yes, we have seen a great August, and we are seeing a continual September. Basically, this is the pre-festive ramp up that the manufacturers do. They bring the goods closer to the consumers. And this indicates that the demand forecasted by the manufacturers is pretty robust for the ongoing season. For us at Gati, I think it's a culmination not just about the demand supply, but about the work that we have put in over the last 2 years on building our infrastructure. And that was very important, because unless we had proper infrastructure, we would not be able to meet the demand of our customers. And with all the new hubs that we have set in, whether it is in Delhi, Bombay, we just opened our new hub in Bangalore. And that's what enables us to kind of take on more business.
I want to understand a little bit about the potential in the e-commerce space, because, some of your peers, like Delivery, the new guys who've entered this space, are speaking about almost a 25 to 30% growth in the e-commerce segment. What is it as a percentage of your own business currently? How is the growth looking like over there?
So we are a B2B player. We do not play in the last mile B2C business. However, for B2B itself, e-commerce is now coming up as a new business, wherein the first mile of e-commerce, which is from the vendors to the warehouses, is growing leaps and bounds. And as far as we are concerned at Gati, we do not verticalize ourselves in e-com or as an industry. We do it by size of business. So we have key accounts, SME and small. And our key accounts is what is getting us the largest growth in the last couple of months, which includes the e-commerce business.
All right. Hi, Mrs. Sarkari. Thanks so much for joining in. Could you give us a sense in terms of pricing? How has that been? From here on, have you all moved pricing around? Point number one. Point number two, what does it mean in terms of margins? I think you were guiding for double-digit margins. Are you getting there?
Yeah. So in our business, which is express logistics, yield is an outcome of also the business that we do. We have what we call zonal deliveries and national deliveries. And as warehousing is getting closer to the customers, the zonal deliveries are increasing and therefore yields are coming down. However, yields coming down does not necessarily mean that profitability goes down because the cost also reduces in tandem with the distances. So yes, yields are falling for us because we are getting more and more of the zonal business. But from a profitability perspective, we are on track.
Okay, so you're on track from a profitability perspective. Got that. So I didn't get what the outlook is as far as the margins are concerned. What is the number that you're looking at? I think I missed that.
So we have already put out that in 3 years, we'll be 3,000 crores with 10 to 12% EBITDA. And
Okay.
we go
That's
by.
in 3 years, sir. But in the near term, what will it be? How do you see that panning out? Say for FY24, what will it be? Particularly on the margin front.
So as we grow our top line, we will leverage our fixed costs and our margins will continuously grow to our end goal of 10 to 12%.
Okay, 10 to 12% is your 3-year goal, right?
Yes.
Okay, and by FY24, what are you looking at by the end of FY24?
We don't want to give out any number for
Okay,
FY24
okay.
right now, but we will see growth coming quarter by quarter.
Okay, just one final question. Can you tell us about these hubs that you spoke about, right? You're planning to start operations in Q2 and Q3. What is the monetary benefit of these hubs, whether it's in Nagpur, Mumbai, even in Bangalore?
So basically, it enables us to give better service to our customers and take more business from them and therefore also optimize our costs. So in turn, both growth of top line as well as bottom line as we build out our infrastructure. And we've seen this happen every time we open a new hub in a zone, which was in Delhi, Nagpur, Guwahati, Bombay, and now we just opened our new hub in Bangalore.
Okay, all right. Thanks so much, sir, for stopping by and filling us in with all those details. We'll hold you on that number, 2026, 3,000 crores with 10 to 12% margins. Appreciate you joining in and speaking to us here on CNBC-TV18. Well, the Nifty is more or less flattish, so let's hop across to Mitesh Thakkar to ask him his view on the index, as well as a couple of stocks. Mitesh, what do you make of the first hour session?
So, Nigel, I think the first hour has been very quiet compared to the moment which we saw yesterday. And I maintain this stand that, 19,850 remains the key level for me to watch. If that doesn't get taken out, I think, we'll see some kind of bounce back toward 20,050, 20,100. And that could be a good exit opportunity. So keep these levels in mind. On the stock side, a sell on PEL or Piramal Enterprises is what I recommend. Keep the stop just around days high of 1,075 and a target of 1,010 can be looked at. And Petronet has come to the buying zone, which I would prefer buying at. So it's a buy with a stop at 230 for targets of 245.
All right. Thanks a lot for that, Mitesh. Appreciate your thoughts. That's on the technicals of the market. Overall, don't lose sight of what's happening in midcaps. Midcaps are now down 300 points. Let's take a quick break. Manisha Gupta will focus on the commodity markets in just a bit. Do stay tuned in. Welcome back. Let's get a quick handle on what's happening in the world of commodities. Brent crude is actually at a 10-month high. It's hit that $92 a barrel mark, so headwind for our markets. But Manisha is here to give us the latest on all of that. Manisha, over to you.
Thank you so much for that, Sonia. Well, yes, $92 a barrel is a new 10-month highs for the crude oil prices. We have seen 2% of gains overnight, and with that, we are 9% on the higher side on a month-on-month basis as well. The crude price is also taking a lot of support from the supply concerns that we have seen into the markets. We already have been reacting to Saudi Arabia and Russia cutting output by 1.3 million barrels per day till the end of 2023. Add to that the fact that we also have seen concerns come in from Libya, which has shut 4 east export terminals due to a storm. And then there are concerns also coming in from Kazakhstan, which also has cut output going forward. That is because of the maintenance issues there. We also saw an OPEC report yesterday, which is still talking about a strong demand in this year and the next as well. For 2024, they're looking at a target of around 2.25 million barrels per day of a global demand growth coming in. Now, when you look at 2.25 and then you compare that to the EIA report that we have seen, that also shows a 2024 demand increase, but that is barely by about 1.7 million barrels per day, while OPEC is talking about 2.25. But when you look at the last 2 or 3 years, we have seen constant gains come in for the global demand growth, and that is something that the street will wait out for on what IEA also has to take. In the meanwhile, US is going to be an important number to watch out for. Here as well, we have seen a constant increase in production, even if by smaller margins, but from 2022 to where we are right now and the expectations of next year, which would be a record high. That's the kind of supplies that the street is looking at. As I said, we are also watching out for more data to come in. This is a report card in the meanwhile on what the crude prices have done in this year. We started the year with 82 and then saw a sharp decline up to $71 a barrel as well in the month of June, holding at a 10-month highs right now, 2023 highs as well, $92 a barrel. It has been very strong gains in last couple of months, one-way rally. Actually, in last 2 months, we have seen the prices gain up by nearly 18%, and the markets do anticipate the momentum to continue on the higher side. This is what the markets are anticipating or looking forward to today. You have IEA numbers coming in and the US inflation data that would set course for the next direction.
All right, thanks a lot for that. Well, Bata is one stock that is actually under pressure right now. So just pull up the Bata stock. Nimesh earlier on in our standout brokerage corner had highlighted that this stock could be under pressure. Nimesh, over to you.
Thanks, Sonia. So, as you rightly pointed out, stock down 2% on the back of the Citi note. So they've initiated a sell rating on the stock with a target price of 31.10. A potential 24% downside from current levels. Now, Bata is the largest footwear retailer in India, but the growth has been missing for them. In fact, they've lost market share as well. So it's been a zero volume CAGR over the past decade. That's according to the Citi note. In fact, if you look at the revenue CAGR for the last 5 years, it was only 4% versus which was the lowest among the 4 listed entities in India in that space. While the valuation at 45 times FY25 price to earning looks attractive to Citi, they believe that the reverse DCF implies a 17.5% revenue CAGR for the next 10 years, whereas in the past decade, they've reported just 11% CAGR. So while the street is excited about the possible tie-up with Adidas, which we've reported as well, the company has been losing market share. That's been the biggest worry for Citi, and hence a sell rating with a target price of 31.10 on Bata India.
All right, thanks a lot for that. Well, KEC International and GMR Power are also buzzing in trade. Vivek is tracking them. Vivek, over to you.
Well, that's right. Both the stocks are buzzing after, order wins have come through. So KEC International, the company has secured orders of over 1,000 crore across various business segments. Now, talking about the civil segment, the company has received an order to build a data center in Western India and also to set up a manufacturing facility for a global FMCG major in South India. In the transmission as well as the distribution segment, the company has got a transmission line order as well as the supply of tower hardware as well as other infra in the Americas geography. Now, talking about GMR Power, one more order win has come into the company's kitty. This time around, the company has received the letter of award for a smart metering project worth over 2,470 crore in the state of Uttar Pradesh.
All right, thanks a lot for that. So that's KEC International up about 5%. But I think the big macro development, which is a big positive for our markets, is inflation falling to 6.83%. That was the best surprise for the economy and the markets. On the other side of the break, in our special segment, it's the economy. Lata will speak with Shantanu Sengupta, the economist from Goldman Sachs, to discuss the details on the inflation data. Stay tuned.
On It's the Economy, it's a double delight. A double delight for the economy. The CPI inflation for August came in lower than expected, while the industrial output for July came in higher than expected. What more can you ask? The August CPI was up 6.83% versus the CNBC-TV18 poll of 7.08%. Likewise, July IIP came in at 5.7%. That was better than our poll of 5.2. Incidentally, that 5.7 is, I think, the best in 9 months, best since last November. Now, what does all this mean for the economy? Are there some upgrades to growth forecasts and downgrades to inflation fears? Let's ask our guest today, Shantanu Sengupta, the economist from Goldman Sachs India. Shantanu, good morning, and thank you very much for joining us. Well, that really is the first question. Looking at the CPI number, which has come in like a good 27 basis points below, the consensus forecast, is there a chance that you guys will start revising your inflation forecast lower for the year?
Yeah, good morning, Lata. Not really. We were already 20 basis points below consensus. We had a 6.9 in terms of our forecast for this month. It's coming at 6.8. We are comfortable with our quarterly forecast of 6.7% for the current quarter. We think there's a slight bit of downside risk to that, in fact, given what the tracking estimate for inflation is for the month of September. I mean, it's only the first 10 days of September, but given how vegetable prices have behaved, we think that the reading could be sub 5.5%, given what we have seen in the first 10 days of September. And thereafter, we expect inflation to be in the 5.5 kind of handle going into the next quarter. On the growth front,
I'll come to the growth I'll come to the growth in just a minute. But to complete the inflation point, what is your full year estimate? Any changes to that? I think RBI stands at 5.4.
We haven't made any change to the full year estimate as well. We were at 5.5. We are staying there. See, the nature of vegetable prices is such that it goes up very sharply. It's extremely volatile. It comes down also very sharply. I think the concerns, and we can get into it later, will be more on what we are seeing in rice and pulses. They are longer cycle crops. Obviously, you cannot just correct them every quarter with higher supply. India also happens to be the largest exporter of rice, and hence it'll feed into global prices as well. On pulses, we are the largest producer, largest consumer, and hence you can't really import your way out of this. So if the Kharif production overall is poor, you'll probably have rice and pulses inflation elevated into the next quarter. It still doesn't impact your headline in a big way. We still think that it's going to be sub 6% in the 5.5 kind of range for the next couple of quarters.
Okay. Shantanu, the LPG prices perhaps are not getting reflected here. Do they make an impact actually on CPI at all? Is it an element? And if you extrapolate that closer to elections, there could be more. So do you think there can be downside surprises from fuel?
I think that what will balance out is the fact that oil prices already are at $90, $92 a barrel. So, in fact, on the other side, there was market chatter about excise duty cuts, which we think will be extremely difficult in this kind of an environment. If you're getting a food supply shock and monetary policy finds it difficult to deal with it, the burden of this will fall on fiscal policy. And hence, you will look for more of subsidies and transfer payments coming from the government side. So I think that will be the balance as you get into the election cycle early into next year.
No, that's a fair point. You have only that much money and you can't keep giving, excise cuts in fuel as well as food transfers or income transfers. The government may not be in that context. Have you all thought over the government's borrowing program itself? I mean, the second half borrowing program is yet to be announced. Maybe this is a premature question, but there could be early elections. After all, there is an early or an unscheduled parliamentary session called. There are guesses that this is in preparation for elections. So, borrowing program, are you betting it can be higher than expected?
I think they have been extremely prudent and conservative, I would say, in terms of fiscal management over the last few years, despite the higher fiscal deficits that you saw during COVID they have stuck to the path of fiscal consolidation. So I think that sticking to the path of fiscal consolidation remains. Having said that, there are challenges that are emerging in the second half of the fiscal year for overall fisc. As I said, you have this transfer payment versus and food subsidies going through. Your corporate taxes are running slightly below what was estimated. You're sort of hitting the seasonality that you had pre-pandemic and not really what you have seen in terms of the seasonal variations post-pandemic. You've got some room in terms of the RBI's extra dividend transfers. And in our view, it's imperative that they stick to the asset sales or the disinvestment program for the fiscal, for the borrowing program to really go through smoothly and not have extra borrowing into the year end. Also, they have, T-bills can manage the program into Q4 if at all required. So we are not really baking in a higher borrowing number in terms of bonds at this stage.
Okay. No, you touched the right point in terms of tax collections. We will know, of course, we will be much wiser after the September 15th advance tax payments come through. But as of the August numbers that were released, I think the July numbers were released, corporate taxes were running at 2.8% over last year. And the asking rate from the budget estimates is 10.5%. So really tracking way below at least estimates. But let's see, we would know only after advance taxes. Now let me come to growth. IIP numbers were good. PMI numbers have been good, even if August was a shade below July numbers. So what's the growth picture looking like? Is it looking brighter than one expected?
Actually, we have a slightly more tepid forecast for the current quarter. IIP has been an upside surprise compared to consensus. Even with that, given the amount of weather-related disturbances that you've seen in the economy in the current quarter, and given that you have already front-loaded a lot of your capital expenditure from the government front, we think that the fiscal impulse going into the current quarter will be lower than the previous quarter. And given the weather-related disturbances also, we are baking in about a 5% growth for the current quarter. We jump back to about 7% in the next quarter, though. It's just given the disturbances that we have a more tepid growth forecast. So we were at 7.8. We think we come down to about 5% and get back to around 7%. So on average, you're doing about 6% growth for the second half of the calendar year.
So for the full year, we don't get to RBI 6.5. Where do you stand?
We have a 6.1% for the full year, fiscal year 24.
Okay, well, that again is a number which is vulnerable to weather, as everything else is. Now let me come to the Reserve Bank liquidity policy. They went hugely tight on August 10th with the ICRR. The ICRR has been removed. But at least for the past few days when I checked, I think the call rate is still hugging the MSF rate. I mean, it's above 6.5. Do you think RBI will keep the liquidity tight, or will it relent because inflation is lower than expected?
So I think the first measure of tightening liquidity was the fact that the 2,000 rupee notes deposits had increased liquidity, and therefore they wanted to tighten it from there. Our sense is that the RBI wants to remain slightly hawkish, given the fact that headline inflation is still above the 2 to 6% band that they're targeting. I think they will also take a lot of comfort from the fact that core inflation has come in below 5%. And it's not just core goods, which we have been predicting will come down over the course of this year, but also core services inflation, which is lower. Given even with that comfort, given what we've discussed on rice and pulses earlier, we think that they'll want to keep liquidity slightly tighter so that the overnight hovers between the repo and the MSF. But I don't think they would want it at the MSF, which is what the market was getting it to when liquidity became really, really tight. So somewhere in the region of somewhere between the repo and the MSF is where we think overnight will remain.
Okay, well, today it is actually above the MSF rate. The call rate is going at 6.8 as I speak. and the tripartite repo is also going at 6.75. Well, for those of you who don't care for the money markets much, the call rate is the one-day rate that banks pay when they borrow from one another to meet their CRR requirements. That is the one-day rate. It should ideally be at where the repo rate is, 6.5. But because the Reserve Bank has kept things tight, and liquidity will get tighter as we get to September 14th and 15th, because money is taken out of the banking system and paid to the government. So the tightness is to be expected. Nevertheless, it is in the shorter run a little tight. Now, here's another question, Shantanu, which is not really very immediate, but have you all paid attention to that IMEEEC? Well, I got all kicked. India, Middle East and Europe getting connected by rail and sea link, and perhaps a new trade route, something very historic like Vasco da Gama's route is perhaps being explored. Do you think this makes a very big difference to the medium-term India growth story?
Lata, I think the G20 was very well hosted by India. Cross-regional trade collaboration always contributes to long-term growth. Our potential growth estimate was around 6% in the early part of this decade. With the kind of reforms that have gone through, especially on financialization, the IBC, GST as the indirect tax reform, we think that potential growth for India is rising slowly and will go towards a 6.5 kind of range by the end of this decade. Any kind of cross-regional collaboration which opens up newer supply chains, brings overall logistics costs down, will only aid to that.
Okay. Well, I know we are counting our chickens before they hatch, but it looks like another new chapter in terms of international trade. Out of time, Sanjeev, but Shantanu, but in any case, we are going to get the US CPI number, so we will have much to discuss when we meet next. Thank you very much, Shantanu Sengupta, for joining us with your details and your opinion on inflation and growth. We have to wrap up on Bazaar on that positive note and just hand it over to Chartbusters, which has a gloomy picture to tackle as far as at least mid-caps are concerned.
D Street stays in consolidation mode. The sensex and the Nifty off opening highs to trade flat. Broader market weakness continues for the second day, with the mid-cap index down over 1%.
KEC International gains after securing orders worth 1,012 crore rupees across various businesses. GMR Power as well is up close to 5% after it gets the letter of authorization for smart metering project worth nearly around 2,500 crore rupees in Uttar Pradesh.
Bata corrects after Citi initiates a sell on the stock with a target of 1310 rupees per share. The brokerage says the company has lost market share led by subdued performance and their FY19-23 revenue CAGR at 4%, which is the lowest amongst top 4 listed companies in the sector.
Logistics firm Gati surges after reporting its August business update. The total volumes are up by close to 24% in comparison to last year. The management tells CNBC-TV18 that August volume growth signifies pre-festive growth and September will see similar growth. They also go on to state that by 2026, they aim to hit revenues of 3,000 crores with margins in double digits.
Hello and welcome to Chartbusters. I'm Ekta Batra and with me is Nigel D'Souza. Well, it's turning out to be a session where we are seeing that follow-on selling which is coming through for the broader market. So that is a point of worry which continues. So the mid-cap index is currently down over 400 odd points. We have the small-cap index which is under pressure as well. So let's see whether there's any kind of buying at lower levels for both of these indices. But obviously the narrative has now shifted to quality large caps, and that's probably where the market is putting their incremental money in.
Well, indeed, Ekta, but if you look at it, some of these pharma names are doing very well today. The street is sensing something. I don't know whether it's business related for the entire pharma space or they're expecting some sort of a deal to be announced. But just take a look at that. Ajanta Pharma is up close to around 8%. That's clearly the big outperformer today. You have Granules as well that's up close to around 4%. And Glenmark as well has moved up. So quite a few of these pharma stocks, Ekta, it seems the ones that you track, they're bucking the trend today.
Absolutely. You mentioned Ajanta Pharma, which is up around 9 odd %, Glenmark, which is up around 3.5 odd %. But just look at the moves that